Hi, I'm Jeremy Johnson, CPA, and we're still in our Strategically Planning for Your Future series. Now, today we're going to cover planning for college. Okay, so I want to start by throwing out a statistic. Currently, according to Fidelity Investments, families are on track to cover only 30% of college. So, what do you think the other 70% consists of? My guess would be student loans. So I want to talk a little bit about other options that are out there to help mitigate the need for accruing interest that you have to pay versus actually using the earnings to help you pay for college. So the first that we'll cover is the 529 plan. Now, this particular plan, you make contributions, and these contributions are invested, and earnings can grow tax-free. Now, here's the stickler with that. Those earnings will grow tax-free as long as you use those earnings for qualified educational expenses. So, what are educational expenses that are qualified? You have tuition, fees, books, room and board. Okay, so these are all things that you can use these earnings for, and that'll keep you within the threshold of not having to pay taxes on that. And now, one of the things with this is there's no income limit. So whether you make $50,000 per year or $500,000 per year, you can use and you can benefit from a 529 plan. Now, just like early distributions for a 401k or any retirement vehicle, there is a penalty if those funds are used or those earnings are used for non-qualified educational expenses. So you have to keep that in mind. The second one we'll cover is it's a Coverdale plan. This particular plan is very similar to the 529. There are lower contribution limits, okay? So with this particular plan, you can only contribute $2,000 per college attendee. So let's say you have two children that you're saving for. So you can actually contribute $4,000 in total per year for this particular plan. And income limits do apply for this plan, unlike the 529. So here's the biggie for this one. Qualified education expenses have been expanded to include private schools. So that's a big, huge plus for a lot of my clients because they've been asking, can we use that as a deduction? No, you can't. And you still can't use it as a deduction. However, this particular plan allows you to use your earnings to pay for those private school tuitions. So that's a huge plus for this particular plan. Then you have prepaid tuition. Now, this is one that many people may not have heard of, but actually a few years in advance of going to college, you can begin putting money into a fund and it would lock in your tuition and fees for this particular college. Now, from my understanding of this is actually a state type plan, and so it's very state specific. So there are some states that have not adopted this plan, so you have to look at the state that you're in. But it's for colleges within that state that you're actually able to hedge your inflation or hedge inflation. So if tuition goes up, you're still locked right in at the rate when you started contributing. So that's a huge plus. Now, of course, for any of these plans to really work for you, you have to consult your income and your budget that you've created, and individuals that you may need to talk to, of course, your tax preparer and also your financial advisor. These would be individuals that would be a great help to you for just helping decide which one works best for you. And of course, if you have any questions, feel free to reach me, Jeremy at JA Johnson CPA, and we'll see you next time.